5 ways to make more money with investing. Yeah, it really is that easy. I mean, come on, make more money with just 5 simple ways? Well, with these key principles that I'm going to show you right now, 5 of them, you're going to be able to go from maybe not making any money to making more money than you've ever imagined. So stay tuned. All right, welcome back. So today we are going to talk about 5 simple things that you can do to go from maybe not making any money to not being an average investor, but being a great investor. 5 simple things. I'm going to break them down for you. And I'm glad to be back. I missed last week and I apologize for that. I've tried to be super consistent with my content. I know I dropped from 2 videos a week down to 1 video a week, and then I missed last week. My schedule was just absolutely crazy. I spent 10 days riding dirt bikes all the way down to Cabo San Lucas, down the Baja Peninsula. I have a TV show on ABC called Rip to Cabo, so we were filming for that. It was super fun riding a dirt bike for 8 days, like meditation in the helmet, and a couple days in Cabo with the family. I came home, then we went to Texas. A little bit of work, a little bit of pleasure. I'm looking at setting up a giant Bitcoin mining facility, which I'll talk to you more about. If you want to know more, leave the comment down below. Bitcoin mining, a giant Bitcoin mining facility in Texas. I also took the family along. We went surfing in Texas. They have a wave pool in Waco, so we did that. That was really cool. Went to the Dallas Cowboys Stadium, saw that. I came home, and the very next morning, took off to Las Vegas, where I was at World CryptoCon. I was speaking there. And it was an awesome conference, World Crypto Conference. If you guys want to know more about these travels, some people have thought maybe I should start a vlog. I could show you some videos of the Bitcoin mining farm, surfing with the family, riding dirt bikes, etc. Let me know in the comments down below. And then by the time you watch this video, I will be in Cincinnati, Ohio at the Chainwise crypto conference, and I'm going to be speaking there. I have a keynote that I'll be speaking there as well. So lots more stuff. I've been super busy. But anyway, let's just jump right into it. Let's talk about the 5 ways that you can make more money investing. All right, so let's get right into it. So first off, make more money than what? Okay, that's the first thing, right? So if you're not aware, which I'm sure you are, we are in a booming bull market. The markets, and I mean all the markets, the stock markets, the bond markets, the housing markets, the gold markets, the crypto markets, everything has been booming, going straight up for a decade. Since 2009, we had the big great financial crash in 2008, the one that wiped me out. We talked about that. Since that time, since 2009, we have been almost going straight up, as you can see in the chart, right? The market has been crushing it. Here's an ETF. It's called the Vanguard Total Stock Market ETF. And basically, with one click of a button, you can buy this ETF. It's called the VTI, and you're basically buying the entire stock market. So you have exposure to it. And that you get 100% of the stock market, and that is up huge. As a matter of fact, since 2009, it's up 500%. 500%. So in 2009, if you would have just bought that fund, that ETF, one click, you'd be up 5-fold since that time. And there's a lot of other ways that you can do that, but basically that's how good it's been. In the last 10 years, it's up 500%. But where do you stack up? Have you made 500% in the last 10 years? Unfortunately, the answer is no. Well, I don't know about you personally, but for the most part, it's not. The average investor definitely has not. As a matter of fact, the average investor has done worse than every other asset class. As you can see on the chart above, or on the screen, or back here behind me, you can see each individual asset class and what their returns have been. And the average investor is the worst. The average investor has done worse. He could have bought any one of those asset classes and put all his money into that and done better than what he's done. And that's horrible. I hate to say that. It's unfortunate. The reason why is because of the emotions. The emotions. You've heard me talk about this over and over and over before because it's so important, and I want to drive it home, is that humans are horrible investors. That's right. Our human nature makes us horrible investors. It's our human nature. It's our emotions. We get on this roller coaster of emotion, and we want to buy when the market's at the top, and we want to sell when the market's at the bottom. That's what human nature makes us do. As you can see on the screen here, this market fear curve, right? So you can see at the top, there's the bull market, and then as it comes back down in the bear market. But unfortunately, we're pretty basic beings, right? We're motivated by two things: moving towards pleasure and moving away from pain. And so what that means is when the market's going up and everyone's making money and everybody's making money but me, I want to jump in. I want pleasure too. I want to make money too. So I jump in, I buy at the top. And when the market crashes, it's painful. It sucks. Nobody wants to lose money. So we sell. We don't want any more pain. I don't want to lose any more money. So I sell. So I buy at the top and I sell at the bottom. That's what happens. That's what the average investor does. And it's unfortunate. So how do you beat that? Well, you stay the course. You stay the course. Go from A to B, right? If you want to avoid the mistakes of this emotional roller coaster, as I call it, jumping in and out, then you need to stay the course. And I get it, right? If you fall into that category, I get it. It's not your fault, right? As they say, investing ain't easy, right? It goes against our human nature. So I get it if you've made those mistakes, but it's time to correct it. And I'm going to give you 5 simple ways that you can do that right now, okay? So don't be average, right? The average investor has lost money compared to every other asset class. Don't be average, right? Be above average. Be better. You can be better. You need to have a plan to crush the market. We're in the longest bull run in U.S. history, and you have to be in the market to win it. You have to be in it to win it. All right. So here's 5 simple ways that we can make more money with investing starting right now. It's pretty simple. All right. So number 1, diversify your assets. Now, I showed you that any one of those assets would have done better than the average investor. But you don't want to just buy one of those assets. You want to diversify your assets, all right? Diversifying your assets, buying multiple asset classes is the best way to build, but not only build, but to keep your wealth. Now, I'm living proof that it's easier to make money than it is to keep it. So by diversifying your assets, that's where I got it wrong. By diversifying your assets, you can build your wealth and you can keep your wealth at the same time. And what it does is it takes the emotion out and helps you to survive those emotional roller coasters because your total portfolio is kind of staying more constant, even though individual assets are moving up and down. We also want to talk about different assets like stocks and cash and real estate and cryptos and on and on and on, right? Those are the types of assets you'll want to diversify into. And by diversifying, you're going to get better returns for low risk. And like I said, I told you my story. I didn't diversify. I lost it all back in the last great financial crash. And that's why I pound the table on diversifying your assets. When I was writing the cryptocurrency newsletter, I created a guide, digital asset allocation for the digital age. And I think there was over 6,000 downloads just on that guide, that report that I gave away for free, because I really want people to understand this. I have a new guide that I have that's showing people how to diversify outside of crypto. You can find it in the show notes down below. You can download it for free as well, because I lost all my money. I don't want the same thing to happen to you. So if you want to know more about diversifying your assets, check the show notes and download that for free. So that's number 1. Number 2, tune out the noise, man. Shut the radio off, shut the news off, tune out the noise. We need to forget about short-term forecasts, right? If I had, whatever the saying is, right? If I had a nickel every time somebody asked me, like, what is the price of Bitcoin going to be next week or next month? And I always say the same thing. I don't know. And frankly, I don't care. I care where Bitcoin is going to be in 2 years or 3 years from now. I don't care where it's going to be in a week or two because I'm not a day trader, right? Forget the short-term forecast because nobody knows. Nobody has a crystal ball. I don't know where gold's going to be in a week or two or a month or two, but I do know that central banks are buying more gold today than any time since 1971, since we got off the gold standard. So I do know that gold is going up, right? We could look at the financial system collapsing. Gold is going to go up, right? So I know in the long term, but forget the short term. Turn the noise off. No one knows that. We see like in the news, right? Trump and China and trade wars. And so stocks have been tumbling and people have been selling their stocks because trade war scares and this and that. But instead, focus on the trends, the strong underlying currents, right? That tells you the trends, like I just mentioned, like central banks buying gold, the financial system collapsing, central banks buying gold. Those are big trends. Forget the short-term news. All right, number 3 is a big one, especially for me after losing my money. Proper risk management. All right, practice this, please, please, please. Proper risk management. Now, you do risk management to grow your wealth, and like I said, more importantly, to protect your wealth. The best way to make money is to make sure you never lose money. I think it's Warren Buffett that said that. So we do that through allocation, through multiple assets, but we also do it with position sizing. So when I allocate to one position, so let's say I'm going to buy some emerging market stocks, or I'm going to buy cryptocurrencies, for example, then I want to use position sizing within that allocation to make sure I'm not risking too much. Now, The standard rule of thumb is you never want to risk more than, I say 5%, 2.5 to 5% of your total portfolio in any one position. So I have my total portfolio, that's $1,000, $10,000, $100,000, whatever it is. I never want to risk more than 5% of that total portfolio in any one position. Now, I could go really heavy into that position and I use a stop loss. Or I could use a really small position and go no stop loss. This on its own could use its own video. If you guys want to have a full video on risk management, leave me in the comments below. Tell me that you want. I'll just say risk management, and I'll know, because I could have a whole video probably on any one of these points. So that's the maximum stop loss, and what it does is it caps the downside. So I know that no matter what happens, I'm never going to lose more than 5% of my portfolio. I can withstand a 5% loss in my portfolio. I will sleep good at night. I'm stress-free. I'm happy. I can be more on the offensive if I practice good risk management. I made a video kind of like a basketball game, right? Where even though they're playing offensive trying to score points, there's somebody kind of back there just in case to protect against like a runaway ball or something. All right, now number 4, habits and systems. All right, take time to plan out your actions in advance. Build a system in advance. You need to build the system, you need to build the habits, and then most importantly, of course, you have to stick to them. Now, just like anything new in the beginning, it feels awkward. It's hard. You don't really get it. But over time, the more that you do it, the easier and easier it is. Now, the thing with habits, and I'm so big on habits, I try to put habits in every area of my life because we run out of willpower. Willpower is like a muscle. And the more that I have to exercise that, the more tired that it gets and I start making bad decisions. But habits allow us to go on autopilot. And it's like, brushing your teeth before you go to bed. You don't even think about it. It takes no thought at all, and it just automatically happens. And so we want to build habits and systems in our investing. So for example, systematic investing. So every month I put X amount of my income into investments and they go into these 4 buckets, right? Every month. I know that 10% of my income goes into my investments, and that 10% gets split up in 4 different buckets, 50% here, 30% there, 20% there, and 10% there, right? It's a system. I know automatically, it just happens all the time. I know once a quarter I sit down, I rebalance my books. I take profits from here, I put them over there. And I do it over and over and over until it doesn't take any work. Now it's just a system, it's a habit, and it's just on autopilot, right? And the final tip that you can implement very easily is stick to the plan, right? Make a plan, but stick to the plan. What happens is everyone thinks the plan, I love Mike Tyson says it best, right? Everyone thinks they have a plan until they get punched in the face. That's what he said. And I can tell you firsthand, that's true because I've been punched in the face a couple times, both from training Muay Thai, kickboxing, but also because I've gone through multiple market crashes, multiple bear markets. I've lost it in real estate, through the internet stock crash, the crypto markets. I have been punched in the face over and over. So you think you have a plan, but then all of a sudden the prices start crashing and emotions take over, right? And then all of a sudden you want to divert from the plan, but you can't. Stick to the plan. Stick to the plan you have set. Make some adjustments. Do your regular rebalancing like I've just talked about. And you do that to avoid emotion because the emotion is what's going to wreck you. So to make more money, implement the 5 rules that I just said right there, okay? You can ride these markets to all-time highs. The market's up 500%. If you would have stayed in the market, you would have made 500% on your money. And that way, when you build the habits, the systems, you can avoid being shaken out, right? You take the emotion out of it, get off that emotional roller coaster. Like I said, there's a report in the description below. I'll put it in the comments. You can download it for free. It's going to walk you through all of this in a lot more detail. Let me know what you think. Give me a thumbs up on this video if you like it. If you don't like the video, let me know either way. Give me some thumbs down. Leave me a comment. I love having conversations with all you guys. I miss it. Sorry I missed a week last week, but I'm back. So leave me a comment. I want to hear from you. And that's it. To your success. I'm out.